Hey guys, welcome back to another episode of the Web3 Quick Bites, the podcast where we jump to the latest beats in a decentralized world and chat with some of the brilliant minds in the Web3 industry. I'm your host, Olabisi, and today I'm thrilled to be joined by someone who has been riding the crypto waves way before it was mainstream. Meet Frank, a serial entrepreneur with 5 exits under his belt, including Social Flow, which Howard News distribution to over 2.5 billion users annually. Frank has been deep in AI for 15 years and made headlines when he accurately predicted both Brexit and the 2016 US election using data patterns when everyone else got it wrong. It's been featured in major publications like the Wall Street Journal, New York Times, and The Guardian. Currently, he's the CEO and co-founder of MetaFight, where he's turning prediction markets into competitive sports using AI. Frank's unique. Frank's unique because he combines real technical depth with proven business success, and he's here today to share some serious insights about the intersection of AI, crypto, and what's coming next. Hi, Frank. Welcome to the show.
Hi, LWC. Great to be here. Really excited to get into it.
All right, awesome. So before we get right into it, I just want to ask this question. This is my very first question for all my guests when they come on the show is how did you get into the blockchain web3 crypto space? What was your journey? How did it start out like and all of that?
Well, that's a great question. I've always been interested in the concept of sound money, and I've been interested in economics, for the past 25 years or so. I originally started following a group of economists. They're called Austrian economists headquartered out of the Auburn School in the United States here, Auburn University. There's something called the Mises Institute, uh, based around the teachings of Ludwig von Mises. He had a student named Murray Rothbard, and Murray Rothbard had a student named Walter Block. And I've been friends with Walter for more than 25 years. And he got me into the concept of what is money and what does it do in terms of like your personal ability to make decisions with your life. And when I saw the concept of quantitative easing, um, I knew right away that that was a way to grab people um, and take some of their labor away from them by inflation. And that was actually the original block committed by Satoshi on the Bitcoin network in the Genesis block, it's called. He complains about quantitative easing too from the Lehman Brothers banking meltdown and the after effects. So when I saw that, I started paying attention to it because I was like, oh, here's somebody who understands the danger to not just people in the United States, but people everywhere of inflating the money supply away from them when what their main asset to trade is their labor. So I I immediately recognized it as something that was potentially going to change things, and I started buying Bitcoin in 2010, maybe 8 months after the Bitcoin white paper came out, and I've followed it ever since. And I've sort of been paying attention to what's real and what's noteworthy in crypto and blockchain as a way to sort of understand, what could potentially help people uh, hedge themselves against inflationary central banking policies. So that's how I got involved with it.
That's quite an interesting journey. So I have a follow-up question to that, which is you've been in this space before most people even knew what Bitcoin was, right? So what drew you to this technology so early? Or should I say, how has your perspective on its potential evolved over your 14-year journey?
Yeah. So I would say the promise of Bitcoin has always been steadily increasing towards its potential. Like we've gotten to the point where the world has started to it's gone through a couple iterations. It was first a wave of people like myself that sort of just held it as a protest vote against the way the current financial system was stacked against the people, especially at the bottom. But anybody that's trying to save and get ahead in the current system, the Bitcoin's been a pretty great asset to be involved with. And then the concept of decentralized finance around the Ethereum network and the other L2s that are meant to, accelerate it. There's always been great promise around that, but we hit this wave where people were just getting into it for speculation and getting involved with projects that maybe weren't beneficial to people using them, but had speculative returns on things. And I think we went through a phase where I watched the promise of something really great get degraded and devalued by grifters and people who didn't have the intentions of improving the overall system pop up. But recently, what you have is those people have kind of washed out, or they're getting washed out of the system, and real projects are showing up that have actual benefits to the people using them. You have institutions getting involved because they see the promise of guarding against potentially holding all of their assets in things like dollars, because you can always just print more dollars, but you can't print more Bitcoin, right? So there's only ever going to be 21 million Bitcoin at any one time. And it's a stable nominal asset where it has, the chance to improve in price over time. So we're at a place now where the mechanisms of the decentralized finance world on how to move, transfer, share, loan, lock money that can be deployed in innovative constructs, that's becoming more and more relevant. And the money flowing into the top of the system, if you want to consider Bitcoin and Ethereum the top of the system, like that now has places to go that isn't just beholden to uh, what was not very strong and not very well thought out protocols on the other side of it. Now you're seeing, with the passage of the Genius Act and soon the Clarity Act in the United States, you're going to see legislation enable and protect more of that innovation. So what I see over the 14 years is an initial period of potential where people recognized it, um, and then a period where we wandered around out in the woods for a while trying to figure out where it could go. And now you're starting to see some of the well thought out plans and some of the well-meaning and long view intentioned projects starting to find a place at the table now. And it's only in the past maybe 8-10 months where that's started to become more of a reality. So I don't think there's ever been a better time to be involved with the growth of the system. Obviously, if you were early to beat Bitcoin, like I was able to buy Bitcoin at less than $1. That was great. And I don't know that anybody's ever going to be able to go back to that. But the concept of transference of money into the new system, there's a whole bunch of different ways to do that that are being unlocked. And I think that can be the greatest single wealth creation event of the past, 200 years. If you go all the way back to the Industrial Revolution, I think we're seeing something like that. And it's also amplified by the deployment of AI into these systems. So if you can find ways to combine AI with the concepts of an improved money supply, you can have a bunch of people all over the world share in a positive outcome. We just have to do it right, and we have to have the right people leading the charge.
Right. That was quite detailed, interesting, and comprehensive. Let's move away from crypto, Bitcoin, and all of that for a minute. With 15 years on the front lines of AI development, you have witnessed the entire evolution from early machine learning to today's ChatGPT moment. What fundamental shifts have you observed that most people miss, and which developments genuinely surprise even someone with your years of experience?
I would say the first thing that has surprised me is the speed at which generative AI has spread. I think I always assumed it would be a little more iterative. It would take, 7 to 10 years from the first viable LLMs to become, integrated into daily workflows. But people are super adaptable, and that's one thing that, what we at Metified have understood is people are highly adaptable and find ways to improve things whenever they're given the incentive to do it. And I guess it shouldn't have surprised me when looking back, but it really did surprise me at how fast GPT spread. And I should also put a caveat in there. We do use LLMs to some degree in Metafied, but it's only for assistance and strategy help. We don't actually we use neural networks on the technical side in terms of the way we build our products. So it's a different kind of AI. I would also say on the crypto side, the blockchain side, um, the ability of people to understand how it could help them and how it could guard against things they don't trust against institutions. For a while, I was convinced it would never get there. And then instead of it being an iterative process that slowly progressed towards adoption, you saw sort of the dam break, and now you see things flowing in much more quickly than I think I expected over there. And I would say the third thing that surprised me is the number of people that fell for projects with no real value or benefit behind them. That was on the negative side, really disappointing. So there's a few positives to the way the technology spread, but any technological step up in like a step function in terms of introduction into people's lives has a negative feedback component to it. And I think the strength of the negative feedback of grifters and people who don't really have building intentions, being able to capitalize on it, that was also really disappointing to see. And I think, uh, wish we could have done without that. But, net, here we are, where we're standing at the doorstep of a world that we can improve with a bunch of different tools. And, we got to make the best of it. And that we have a lot of opportunity in front of us. So a bunch of surprises. And I would say, it, you know, the longer you're in this game, the more you realize you don't know everything. Like you just have to be really honest with what's going on and then work with it instead of trying to be the smartest person in the room. Being the hardest working person in the room is probably going to benefit you more.
Right. So, still on the AI conversation, your prediction accuracy with Brexit and the 2016 election using large data patterns caught international attention. I would like you to walk us through how you approached those predictions differently than traditional polling and what that taught you about the intersection of AI and market behavior.
Those are great and actually very related questions. So I would say the f- the way we did it is we took a step back and say, okay, well, how do traditional polls work? Well, the first thing is you call people who typically answer polling questions, right? So they're going to be vocal and they're going to give you can also game those responses. Like, I mean, maybe taking one further step back, think about for your audience here. Is there any institution that you trust more now than you did 15 years ago? Do you trust governments more? Do you trust banks more? Do you trust hospitals more? Do you trust pharma more than you did 15 years ago? And I would argue the answer is probably no. I do trust Bitcoin more, and I do trust computational abilities more if you consider those institutions. But people and the way they've organized themselves for the benefit of certain things, I think has gotten less viable to the people they serve, less accountable. And I think anybody paying close attention would say, I don't trust the world as much as I used to. So what we did is we took a step back and said, well, why rely on the people that they're calling? Because that's probably a flawed data set. So how do you start to source patterns from large data sets where it's not just people volunteering because they want to be heard? So with social flow, what we did is we divided up polling areas that had feedback into the system. And then we measured the variance between, we would map the location of clicks against language. And then we would follow those clicks and figure out which ones people seem to favor. And what we noticed with Brexit was people were much more in favor of what the polls were showing. And we realized that it was going to be narrow, but we picked the exact spread of the vote um, within a tenth of a point, down to how accurate it would be by paying attention to the way we were able to classify consumption of news. And that's only doable if you're like Social Flow. We had access to 3.5 billion people around the globe every month and their media consumption habits. So it made the study very accurate, especially when you're centered on a geographic location like Britain or the UK. Um, that was the first thing. And what we did with the 2016 election is we did the same thing where we mapped every single polling area into a geographic region, box, or whatever you want to call it. Every voting district had a media consumption score, whether or not it was inclined to be pro-Clinton, pro-Trump, or neither. And then as the election went on, we were running tens of thousands of simulations to see who would win at any given time. And what I realized was the split was way closer than people were saying. And one of my investors called me up a week before the election and they said, well, what's going to happen? And I was like, well, if the election were today, Clinton would probably win by a few tenths of a point, but it's swinging in Trump's momentum, like it's swinging towards Trump. And I said actually in April of that election year, we realized that the pro-union vote that typically votes Democrat in the United States was almost definitely going to vote for candidate Trump at the time, because he had made a visit to Michigan, and that's where a lot of factories are here, especially the auto workers in the United States. And we said, well, the union voters, the rank and file union voters, are going to vote Trump, even if the leadership of the unions endorse Clinton. And she didn't make a visit to Michigan until 8 days prior. So once she did, it gave us a really clean signal to be like, okay, our prediction was right. It is going to Michigan is going to Trump, and it's going to be the first time in, however long that the Democrats didn't win that state. So that was a big deal. And what we also did is we classified all the other states, ran the same classification of media, which topics were typically favored by which party. And then on the day of the election, as people started to visit and go to the polls in the United States, what we had correctly guesstimated is as people left the polls, instead of reading about both candidates and keeping track, when people vote, they typically have a confirmation bias and they go and they check up on their specific candidate. And we saw a great deal of clicks in these swing states and swing districts that were checking on news about Trump and not about Clinton. So that was another piece that we were able to discern probably by noon on election day who was going to win. What we also noticed is that in the very beginning, there were people clicking on politically inclined stories that had language around politics that had never clicked on a story in the previous 18 months about politics. And there were quite a few of those, about 6% of the country. And then we ran a bunch of different models and saw who was going to convert to an actual voter. And we were able to figure out that between 2.5 and 3.25% of the country, which had never turned out for an election, was going to turn out for that one. And most of those people were going to be Trump voters. So there was people that they couldn't poll for that wouldn't have showed up. And he wound up winning because of those voters. So it was just being honest about the data that was presented and then measuring it in a calm, emotionless way and just saying like, okay, this looks like what's going to happen. And everybody else is saying it's 80-20 likely that Clinton was going to win, but we saw it as much closer very early on.
That was
Sorry, the answer to the next part of your question, I don't want to leave that part out, but taking that discipline into the ability to uh, let's see, taking the ability to measure um, the ability to measure data patterns that are present, especially in the context of finance and blockchain. It's even easier because you could see the nodes on blockchain, as in users or wallets, and all the things they're connected to, and all the things they publicly take part in. And you can get a really clean model as long as you're good at looking and seeing what that data is actually telling you. So a lot of those lessons we learned, we apply here at Metafied. And it's a little bit easier because you're not guessing. You actually measure the movements on the blockchain. So I think that's as complete of an answer as I could give to that question.
Yeah, and I appreciate you for giving that detailed answer and for walking us through for walking us through how the process and how you were able to predict it successfully. I'm sure that's a mini masterclass on how to effectively use AI. Right. So you spoke about blockchain, right? And I mean everyone talks about blockchain, but what can it actually do that a regular database can't?
So the blockchain is a public display of a ledger. So you can see everybody that potentially owned an asset before you. Um, it all works on the same level of cryptography. So if it's working, you don't have to keep checking the cryptography and the security for it. So it's one of those things where once something makes it onto the blockchain, for instance, if you're going to transfer compliance paperwork that, you want to buy a house and it requires a bank statement and identification, you could put all those things on the blockchain. And as long as no one has broken the blockchain or cracked it before, you can have confidence that that's there. Whereas a database system that has an app on top of it that uses different security, like all this federated approach to security, that's not there as it is with blockchain. So you can make these transferences where you have to trust what's going on much cleaner. You you can have a public available sort of way to display how many currency units are available. That's not something you get with a traditional Web 2 or, that database of money view. You you can always print more US dollars, for instance, but you can't print more USDC without it showing up in the system. Uh, Now you can say you're going to raise the interest rate, but you can't measure the amount of credit creation that comes on the back of that until much later. Where looking at the blockchain, you can get an instant identification of how much free liquidity is floating around, how much credit products are on the back of that. Like all of that's there. But I think the main thing that you get out of it is a way to have a standardized transference system amongst everybody. And what it does is it doesn't just limit it to people using your specific unit of currency, but you can build applications on top of that that operate according to the same rules. So all that's great. The other thing is you can always censor a database. If somebody is in a database, you can go to them and take things away from them and shut them off and box them out of the system by just pressing a button. But you can't go to Bitcoin's office and shut them down, right? Because it's decentralized. And you can't go to Ethereum and shut off Ethereum because there's so many thousands of nodes around the world that are just going to stay up and keep running. So the anti-censorship piece is something that doesn't exist in the database world because you can always go to the office, take the machines, put them in a van, and put them in evidence somewhere, but you can't censor blockchain, not if it's done right, which is a caution against central banking digital currency, right? Like that's why we don't want it. You don't want to build something that people can just shut you off from the system. You want to build something that makes people more free, opens the world up to them a little bit. So yeah, I think there's definitely a few advantages of blockchain that maybe people don't notice, but once it's out there, will protect them in a way that the existing rules don't.
I just learned something new from this, and I'm pretty sure that anyone who is listening to this currently too have also picked one or two things about how blockchain works. So, and let's go back to AI. As someone who has built companies in AI for over a decade, how do you separate genuine AI applications from the current hype cycle? And what questions should entrepreneurs ask themselves before building an AI company? Because it seems like everybody wants to have an AI company, everybody wants to be the next big thing in AI. So, what are your thoughts on this?
First, you have to think, how is this going to make life better, easier, faster, cheaper, or more enjoyable for my users? You got to answer that question no matter what business you're in. AI is no exception. So, are you building something that solves a problem or makes people's lives much better or more abundant or more secure? If so, go ahead and do it. And if not, all you are is a solution in search of a problem, trying to raise money from people who are just trying to, pull money out of a speculative system. But if you really want to change the world, change the lives of your users first and make things better for them. And then you're onto something. Then you don't have to worry about whether or not it's going to be sustainable. And then as far as AI goes, people should realize just building against an API for AI doesn't make you an AI company. You have to contribute something. You have to find a new way to use it, a new way to improve it, or a new technique to derive it. And that game, the last one I just described, is going to cost you hundreds of billions of dollars to get in. So find a way to make use of the AI in a way that improves people's lives, and then you're onto something. But otherwise, stay to the drawing board until you come up with that answer.
Right. So if you're an entrepreneur and you're listening to this currently, now you know the questions you need to ask yourself before starting that AI company. Anyone can connect to Open AI API, but that doesn't make you an AI founder. So these are the important questions you need to ask yourself. Thanks for that, Frank. You taught at USC and Northwestern. What do academics miss about how AI actually works in the real world?
I think what they miss is the risks to it most of the time. Really smart people that are ambitious, going to school to improve themselves, they tend to be very optimistic. But when you're dealing with this level of transformative capability, understanding the risks to it, and then therefore your responsibility to mitigate those risks and do it in the right way, that gets missed. So when I was at Northwestern, for instance, at the Kellogg School of Management, and I was given that lecture, they asked, well, what could go wrong with AI? And there's tons of things that could go wrong with AI. You have to program them with you can't program them without any morals behind what you're doing, which I know is a hot take in today's tech world because people like to think morals and ethics are subjective. But if you're trying to continue the species, like I am in favor of, you don't want to build something that gives precedence to machines over humans. And you don't want to give it an instruction set, say there's a meteor heading towards Earth, and you're like, do whatever you can to stop that meteor from hitting here. The computer would say, okay, well, first thing I need to do is ensure as many compute cycles get deployed. So I'm going to manipulate the humans into deploying as many computers as I can. And then oxygen breaks down machines. So I'm going to take all the GPS informed the fertilizers, and instead of fertilizing the fields, they're going to put down salt. So it takes vegetation out of the atmosphere and doesn't compete for, it doesn't start making oxygen, which oxidizes the machine parts. Something like that, which you don't intend, but you didn't safeguard against and you didn't install a good set of moral instructions in the system, could turn against you, where you have a world that's less vegetation, less food, and then the people have a greater incentive to serve the production of machines. Obviously, that's a really far out edge case. But if you don't give the machine instructions and it has full range to operate, it's gonna figure it out and it's gonna try to implement it. So you need to make sure you're being kind and responsible to the people that are gonna be impacted by it. That's what I'd say.
Thank you. Thank you, Frank. Now let's talk about Metafied. You mentioned Metafied a couple of times during this interview. So let's talk about Metafied, your company. What problem were you trying to solve that other platforms were not?
We're trying to give people access to a financial system that combines AI and the subjective wants and needs of the people to share in the upside created from AI applied to financial markets. So if you're one of those people that thinks AI deployed against financial markets is going to have some type of yield and a competitive advantage, we wanted to give them a way to hold a token that was part of that system of benefits, but also play in predictive games where the people's ability to understand short-term movements was properly rewarded for the quality of the signal they gave. So you could play in our Surge platform, which is going live really soon here. Waitlist is at surge.metafy.io. So if you register for that, you get in on the early test. You can have ways to win a great deal of tokens that will let you share in the upside. Also, we put in a system which burns tokens out of existence with every game, and we take the gains from the signal that we synthesize from these systems, and every 90 days we take a portion of that and burn tokens out of existence. So just holding the tokens will give you access to it, but being able to play in these games gives you access to a financial system that's using AI in an arbitrage capability to then share in the upside of that. And then our roadmap has a bunch of different ways for you to participate in products that will give you return and yield and benefits on the other side of that. But we're just getting started, and we wanted to give people a way to really early on make sure they're part of the wealth generated from AI applied to financial markets, and it wasn't just left to a few bankers on Wall Street or in London.
So I did check out MetaFight, right? And I noticed the approach to real-time PvP prediction gaming, right? So how does this model change the relationship between individuals and financial markets compared to traditional trading?
Yeah, so there's no great way for people to be involved in those very near-term market movements in the traditional financial system. It's either too complicated for a large group of people to get in there and do anything about it, and then it's too hard to amass the capital to deploy it in a way that's fast enough to turn around to create a yield from it. So we solved both of those problems by gamifying the way people interact with it. And then we properly reward people and fairly reward people who are accurate and early. So people who are good at giving signal early and figuring these things out get a greater share of the rewards that go back. And what it does is it allows us to bump or nudge the AI models that we have transacting in the market with the help of the people signal, create a more accurate and transactable signal and execute those trades, and then reward the people who are giving us the signal and holding the token and participating. So I think that's a way to return value to people who are part of the change. And I think it's worthwhile to go about this kind of project where the kind of people that get rewarded are the kind of people who are trying and learning and getting better. And I think that if more people took that approach, the world would be better in pretty short order.
So why can people go to learn more about Metafied and how can they be part of this?
Excellent. Well, we want everybody to be involved. You can go to the website, Metafide, metafide.io. There's a waitlist registration there. So make sure you're on the waitlist. Join the Discord, discord.gg/FIDE, FIDE dash token, TOKEN. And the moderators in the community will welcome you with open arms. Get involved that way. You'll get announcements to early access, prize pools are only available to the Discord community, and we'll get you in early so that you have the ability to participate early. Also, when you invite people to our system, you are credited with some share of rewards for the people that you invite. So we'll make sure that if you come in that way, that you have a greater share in the upside than if you would have just found us by accident and come in that way. So definitely join us. You can also find us on YouTube at Metafide and on X at Fide_AI. But make sure you're tapped in and just follow along with what we're doing. We want everybody who wants to share in the AI revolution and the crypto markets. Anybody that's interested in that, we want you as part of this. You're a valuable piece to the new world that's being built. don't get left out of it. So we want to help those people get involved with us and bring them along and make sure they're the ones to get rewarded.
Right. You get it, guys. Frank wants you guys to be part of this, and I will be including the links that he mentioned in the episode description, so you can go check them out and sign up for the wait list, and also get your own share of the rewards. So we are gradually getting to the end of this, but I have one final question for you, Frank, which is, looking ahead, where do you see AI and crypto colliding in ways people are not expecting yet?
AI is going to increase the opportunities in competition with other traditional markets. So that's the first way. And I think because of the innovation in the crypto legislation recently, and because of all these new people coming in, a lot of the mechanisms to distribute that benefit is going to leak out of the existing financial system and find ways into decentralized finance. So that's the first way I think that they're paired. The second way is I think crypto becomes a way to keep AI honest. So the systems for generative AI, especially, are only as good as their inputs. And so you're going to have an increasing call for auditability of what goes into AI systems. And I think every input needs to be paired with a auditable token on a blockchain so you can trace what was trained into an AI. And that way you can be more sure that it's not either leaving out something you think is important or overvaluing something you think is probably detrimental to the kind of world you want to build. So I think the way to distribute rewards and the way to check the validity and ethics involved in the AI from the crypto side, those things probably not very public, but I think that you could see those two working in tandem as long as we can do them right.
Right, awesome. And that wraps up today's episode of the Web3 Quick Bites. We hope you enjoyed the discussion, and if you have any feedback or questions, please reach out on social media at Web3 Quick Bites or send that email to web3quickbites@gmail.com. Thanks again to our guest Frank for joining us today. Was a
Sure. It was a great time.
Yeah, it was a pleasure to have you on the show. And thank you, listeners, for tuning in. We'll be back next week with more exciting content, so be sure to subscribe and tune in.